Hello everyone and welcome to a quick review of today's trading my trade journal. The mission is clear, getting 1% better each day. Looking at the chart of the S&P 500 on the 2-hour here in front of us, the question at around 2 o'clock this afternoon obviously was, having taken out liquidity at around 4,186 and before that already having swept the liquidity at around 4,191. Should you have taken a long trade in the S&P 500 today? In trading, above all, you need one thing: rules, if you want to answer this question. So let's have a quick look at what my rules for today and in general for day trading are. Namely, establish your bias on the 2-hour time frame, at least wait for an area of interest to be hit, then try and execute on the 15-minute time frame, and the entry criteria being a market structure shift plus fair value gap that you come back to inside, or best of all lining up with a target box. More on these entry criteria later on. For me personally, bias in the end always comes down to trend. So what can you differentiate here? Personally, I think there are 3 types of bias that you can then establish. Obviously, a bullish trend where you make higher highs and higher lows, and then you would try to enter around these points when you're pulling back. Then secondly, obviously, you can do the same thing in a reverse fashion, looking at a bearish trend where you would then try to short the highs if possible. But what most people seem to overlook, and what is crucial in my opinion, is that you have a third phase in the market, meaning the transitioning or also ranging phase of the market. And I have tried to draw up what I mean by that here. Obviously, we are in a bull trend going up to this highest point. However, when would we know for sure that the bullish trend continues? Only once we break this high. When would we know for sure that the bullish trend is over? Only once we break this low. So basically, as long as we are within this area, basically this range, we are nothing else than transitioning. To understand this idea is absolutely crucial, at least in my trading. Why? Because as long as we are in a bullish trend, I will only enter long trades. As soon as we are in a bearish trend, I will focus on short trades. However, if we are in such a transitioning phase, I am, according to my system, allowed to trade basically long, as well as, for example, should we make it down here, short up here. So I could take a long here, I could take a short here, and then either I get stopped out on the short and I take the long higher, or the other way around. So keep that in mind, because this is really crucial and important for today's trading analysis and today's price action as well. So let's dive in and establish the bias of today. Here it obviously comes down to how aggressive you are with your market structure. Is this the latest swing point at around 4,216 before this final push up that we then broke? In this case, you would consider having broken the bullish trend. However, this definitely is a very aggressive interpretation. So you could also take the swing low at around 4,167 as your crucial swing point or higher low, last higher low, to continue trading bullishly. If you can't really decide, this simply tells you what you are in a transitioning, ranging stage of the market, whether you're going to continue further up or whether you are going to look at a reversal, you simply don't know. So let's then establish possible areas of interest. If we take this swing point from around the FIPS from around 4,166, we see that indeed this afternoon at around after 2 o'clock, between 2 and 4 o'clock German time, so between 8 and 10 o'clock New York time, which most people refer to when talking about trading, we did indeed enter my target box, which basically is the area of around 618 FIP down to the 786. And if we say we have already broken our swing point, then we would have come down from exactly what? Another target box that started at around $4,210. Having a second look at our rules, what do we realize? We have established that we are in a transitioning period of the market. In other words, we are allowed to trade long and short if something establishes. We want to wait for an area of interest. We have hit an area of interest. Now the execution is going to happen on the 15-minute time frame. However, area of interest also means fair value gap, which we don't have here on the 2-hour time frame. And also an area of interest can also obviously be a sweep of liquidity, which we had here at the level of 4,191 as well as at the level of 4,186. So having zoomed into my execution time frame, the 15 minutes, let's finally answer the question, did I take a long in the S&P 500 today? And the answer is no. Let me show you and explain to you why. Yes, we did sweep liquidity twice, and liquidity is one of the buzzwords going around in trading at the moment. Nonetheless, let's look at our rules one more time. What we need above all and first of all is a market structure break on our execution time frame, and we simply didn't have that at the moment. So let's forward the chart a little bit and see what happened later today. And we can see that we never got a market structure break. And with that, it is already impossible to basically take a trade on the long side. And without there being a market structure break, obviously there also couldn't be a displacement leg up forming a fair value gap within a target box. So does that mean that you couldn't have taken a trade today in the S&P 500? Absolutely not. For that, let's quickly zoom out to the 2-hour time frame again and look at this section of the chart. Why should be pretty obvious by now. We have established that we are within a transitioning, ranging phase within the market. Thus, we are allowed to trade long as well as short. Now, once you hit an area of interest, which we did here, what do you want to look for? A possible execution, entry, possibility setup on the lower time frame, meaning the 15 minutes. So let's go down to the 15 minute one more time. And here on the 15 minute, have a closer look at this area that we've just circled. Again, once you enter an area of interest, what are you waiting for on your execution time frame? A market structure break. A new high was formed here. Again, we didn't break this low. A new high was formed here. And now again, it comes down to your own discretionary approach to the markets. Is this your market structure break? Then this is the conservative way of looking at it. Or are you arguing that, hey, this can be considered our latest swing point before the absolute high. Then once you break it, you have your market structure break. Finally, you obviously want to enter your trades within a fair value gap. You have one here at 5:30 in the morning German time. You have another one forming here at around 9:15 German time in the morning. However, it was slightly missed. So what do we learn from all of that? Let's quickly zoom out to the 2-hour time frame. One more time, we learned that you need to establish a bias above all. Secondly, you need to be able to identify your areas of interest where you want to do business and have a clear plan for execution. If you do all of that, you will obviously not be caught in moves like this one today, and definitely not on the wrong side of the trade. If you like these kinds of videos, then don't forget to subscribe and hit the like button. And if you are interested in a more in-depth analysis of the markets, then watch the video I link here next. Until soon, take care, bye bye, and thanks for watching.